Good afternoon. Good evening, everyone. Today is Friday, September 27, 2024. Our goal here is to review the market generated information in a holistic fashion. We are intimately following the auctions narrative of both ES and NQ. If we have time, we'll add additional commentary and theorize at the end. We did not speculate in the market, but we did upload the down recording. So please check it out if you want any kind of replay. Just see how the market went. All right, let's go ahead and get started. So we'll start off with our typical questions, the narrative, where's the market coming from, and what is price trying to accomplish. See if we can get an understanding of the narrative and the expectations for the day. So again, today is Friday, the anticipated PCE, and then we have the end of the month, which is on Monday. So this is really the last full week of the month. So take a look at the monthly candle and then the weekly. And then we have the daily. We're still one time framing for the S&P 500 for as of Thursday. Close above the all-time highs. Close at the all-time highs. So very solid day. And so really they wanted to really continue the one-time framing. Ideally, just keep their prior low from Thursday intact. Looks like they were able to do that. We essentially just had an inside bar. Again, the NQ had been the weaker of the two, but they were showing a solid sign of strength as we were kind of breaking out of this area. But it's a possibility that this was a lot of short squeezes and anticipation for some more aggressive sellers. We've been seeing sellers just across the board. Again, if you've been following, just looking at the delta, the majority, we were always ending with more sellers than buyers. So really the same situation for the NQ, except they're just not at all-time highs. They did not protect their low. So their one-time framing has officially snapped, and they close at or slightly under their daily 5 smoothing average, their simple moving average, the SMA. So big loss for the NQ, not so much for the S&P 500. So again, we did have the PCE and just like a few others at the 530s, and then the 7 a.m. the consumer sentiment. We'll go ahead and look at the S&P 500 here. The volume overall was a bit light, not excessive, but you can see the freaking delta. We pretty much close at the minimum, which is almost 40K, about 39,000. So again, a multi-distributed profile, but just the sellers were just really dead set on this 5,800 price, and definitely we need to look at the intraday for a little more insight. Another climactic day for the NQ with a lot of sellers just really kind of showing out, coming out their woodworks. Again, we can just see it here, which is at the lower quarter of the day, or the lower third, which is where the VPOC was. So even with all this selling, the volume is still fairly light, so you want to take that with a grain of salt. But there's definitely some effort from the sellers to push prices lower. Looking at the actual sector tracker, we're not really seeing too much downside, as with the recent rebalancing, everyone has been doing pretty well, holding sturdy, that is. With the leader being technology. So if you would have told me technology would have been down 1%, I would have told you the S&P 500 would have been down a bit more, but a very solid day, especially for consumer discretionary, with Amazon leading to the downside, but Tesla is really holding it up 2.5%. Everybody else was just pretty much, hovering around 10 to 15 basis points, with the little outliers being energy, who isn't the strongest, and the utilities, who has some weight, up 1%, with energy up 2%. And this is more of a defensive posture with the communications and consumer staples being green, even with industrials. Solid day for finances to close at 30 basis points, and basically unchanged for the healthcare sector. All right, so again, we understand that this is just an inside bar for the S&P 500. Just looking at this here, see if we can just zoom in. Just one moment. All right, so again, this is just a multi-distributed profiles from what we can see here. Again, we have our weekly, our monthly, then our composite that goes back to April. As you look at the actual shape of the day, so it's pretty much essentially a bell curve, but it's just kind of split between two distributions at the top and lower. So there's definitely some attempt here. I'm assuming this is RTH. We ended up squeezing a little lower and then having another distribution towards the midpoint, closing at the lows, which is seems like prices headed back to the weekly, the VPOC. So again, if we put this and complete our whole weekly profile, this is essentially just a bell curve, pretty much perfect shape. So we'll go ahead and move that with the whole monthly composite. We can see that this is still a multi-distributed with the high nodes here. I mean, really 4 from what we're seeing. So I mean, we're not going to turn this into like a monthly review or anything like that, but solid showing for the buyers to keep price above the composites value area high. So kind of leave it there for now. For the S&P 500, they're still above the FOMC zone, about 30 points away for now. And we'll give that same attention to the technology. Again, they are not at all-time highs. Their goal was to push above, use this as support, and kind of build volume here, and then ideally continue back above. So it appears some of that phase is possibly happening here from what we can see. So again, just a multi-distributed day, no reason to break that up. Just looking at the monthly, the VPOC is at the lows, and we close somewhat at the midpoint, which is still within this range, right at the beginning of it, coming from the downside. So essentially, that's exactly what happened. We can really just pull this open and look at it, pushed above, and now we're just kind of building volume sideways. So NQ ended up on a pretty much of a cliffhanger to end the week. So if we put this into the monthly composite, you can see they're primarily building volume between these two ranges. So this high volume node here is incredibly important. It's definitely going to be the VPOC for the composite. All right, same multi-distribution, high node there, and here. Mainly 3 opposed to 4. And this is still within the value area high and the value area low for the complete volume zone. So I mean, this is a perfect bell curve. Yeah, it's really cool to see. All right, and we'll head to the intraday. Actually, let's look at the 138-minute candles for that same NASDAQ. This is everything that we're looking at, just looking at it in candle form. You can do your trend lines, even this one as well if you like, which we have broken under. So, we're not going to do too much speculation here, but next week's definitely going to be interesting, especially as we head into the end of the month, start of the month. And then we have all of our ISM data and then non-farm payroll. And just everything of that nature. And then I believe the 10th is the CPI, which will be our first CPI post earnings rate. But I'm not a fundamentalist, so we won't get into the weeds of that. So again, here you can say what you will about that, but essentially we're just pulling back to the top part of this zone. It's important to see if the buyers are going to remain in control. They really need to defend there, but they really have a higher low all the way up into this point here, which is another 200 points. So buyers have a lot of room to give up. Same situation here for the ES, though I wouldn't be surprised if this is completely broken here. And we're hovering at the 57.80s now. I wouldn't be surprised if we can go down 80 points and kind of protect these 57.20s, these 30s. The 57.50s is where the FOMC high zone is here. So this is really the first line of defense there. But again, we'll leave the projections for another time. The 65-minute here for the intraday, you can see sellers just really stepping on the gas here. But even with all this effort, there wasn't too much done. They did not break the prior day's low. So while this is incredibly high on the negative delta side, it really wasn't much reward for the sellers. The range was only 40 points, with the NQ being 230, 223. So yeah, I can't think of a good analogy here at the moment, but I would definitely take this with a grain of salt. Same situation here, though the NQ did break their prior day's low. As soon as they broke it, they scurried back up into that range and still closed. Just essentially just bear flagging to end the day. And again, if you've been looking at my videos recently, I've been saying the same thing where we'll have our initial leg, and then we'll just pretty much just chop sideways. I mean, essentially what happened here, just bear flag. And yeah, we had a little look below and then no continuation. So we just kind of reverted back into the mean. Still a relatively weak close, but again, you want to take it with a grain of salt. All right, so we have a good idea of where we are from the highest time frame and then the intermediate as well. Actually, before we get into the 3-minute candles, let's take another look at the daily candles and the weeklies and the monthlies. So I believe I did this earlier, but just to make sure we go through it, the monthly, and then we have the weekly, which is back into the range of the prior week, which is last week. I mean, and just an idea of what we look like on the daily. Still an inside bar, red bar, one red, two green, one red, one green, one red. Not saying that we're necessarily like topping out, but it may be something similar to what we saw 3 weeks ago with that 2-week balance range. And then the same situation for the NQ, where we have one more day for our monthly candle, which is going to be Monday, which will be interesting. But the NQ actually finished back into the range from the middle of August. So definitely more of a mean reverting ending for this week with their daily closing. Did they close below it? They closed near the low of the prior day. They did break it, but not by much. All right, I just wanted to make sure we got that in because that context is important. All right, I'm not gonna go over the whole week's range, but we had that overnight range from the prior day for Wednesday night, the big drift up, and then the big sell off that basically ate up that whole overnight range, completely broke that overnight low, and then they ended up closing somewhere in the middle. So again, that was yesterday's. You can look at that yesterday's video. With that close, we essentially just sat sideways, drifted down, couldn't trade, couldn't sustain that price below. We tried our leg up through the prior initial balance low. We could not hit the initial balance mid from yesterday and ended up just settling there into the open. Even with the PCE data, the most that did was get us through the prior IB low, but no real continuation afterwards. Kind of looked above and then just kind of chopped around that area. And then once the market opened, we tested the bottom of that range, found some support, poked below. It made a new low with the consumer sentiment data at 7. Tried to break through that range and ended up closing essentially just with a little bigger doji. I think this is called a spinner candle, if I recall. Pretty big wicked action for the first half of this bracket. We looked above, we tried to go below, tested the VWAP for the S&P 500 for the full session, and that was enough to initiate us for a leg higher, which took us through the overnight high and also through the prior IB mid. Once we looked above, we closed a little lower. We tried once more and ended up having a whole red bar here. Once we had that red bar, that forced us down to the full session VWAP, back to the open, and we really just kind of chopped around there, but noticed they couldn't stay above the overnight high, even once they had a full body candle close. Forced back under the 5 smoothing average, and it really just kind of went up and down for a little bit. So just looking at this in a vacuum, you would just say, oh, maybe that's a little simple. It's kind of hard to tell. Technology was extremely weak, and we'll look at that in a minute. So look at these and look at these with correlation as a correlated products. You have a little more confluence and confidence to look short here. Why the technology sector was failing. But again, we'll get into like the play of the days a little later. But this makes sense. Saw a little bit of this in real time, especially with these rejections with the VWAPs. But we'll go into the play the days just shortly. I do want to focus on the scene of the crime here. We had our few little weeks here. You really, once you had the one test there, you would kind of want to stay away from here, especially since we had the 7 a.m. data. Once we looked above this overnight high, there was really no action above, and we stayed below the 5 smoothing average for the longest. When you're seeing that kind of behavior and any looks above are getting engulfed, that definitely warrants having a sell stop below here. Now, where your stop will be, I'm not sure, but this just makes sense just using the SOC for the day, especially with this anticipated data of the PCE. And then really with that, that's all. It's kind of a leg lower, a leg higher, a leg lower, and then we essentially just bull flag for the remainder of the day. The bulls tried to, excuse me, we bear flag for the remainder of the day. We tried to have some legs higher, but they could not reach the current IB low, and definitely nowhere near the VWAPs. So I mean, that's really much it. We did not break the prior day's low, and we closed below the overnight low. So very weak close for the S&P 500, even though they were more of the sturdier ones. Okay, so same situation here for the NQ. I won't belabor it. I'm honestly not in the mood. We'll have our two-way trading here, our leg lower than our leg higher. Their SOC is a little higher within their range. Just notice that they didn't get above the initial balance low from the prior day at all. Once they reached that area, just notice there was no kind of upper wicks at all. So there was no, either this was like a big passive buyer, which we don't have the video around that time. We started like right before the open. But there was just nothing on this. This is a situation where you would use like Bookmap or maybe even look at the footprint for a little more context. Actually, let me do these trade bubbles, see if I can see anything. Jesus. So yeah, there was definitely some sellers that were lurking in there. But okay. So again, so technology was much weaker here. You can notice when they started their RTH open, their first candle kicked them out of that range, and there was no real attempt to get back into it. The one chance got rejected. The next candle tried to push through, eventually got engulfed on the next bar. Even with the 7 a.m. data, they couldn't reach it. I'm not sure what was up with this candle. I even saw this in real time, but it just randomly just shot up and tried to test the open. I'm assuming there may have been like some news for some kind of stock, I'm assuming. But this was super random. A bit jarring in real time, but I mean, it still stayed with the same concept of they're closing below all their DGPs. And in really the same situation here, except instead of them being above their overnight high, this was still within their range, which is somewhere near this midpoint of this SOC. So, I mean, this made sense here. Where you would get in, same situations, these rejection of the VWAPs. We talked about this yesterday in depth, and they can't stay above the 5 smoothing average, and then we essentially just bear flag for the remainder of the day. So yeah, really not too much to talk about there. And they did they did test below their prior day's low, but they ended up reverting back and closing around a little lower of their overnight low as a whole. So again, the trades of the day here, at least would be if you're fast enough, which I don't even know about this. Probably you need a little more information, but definitely the rejection of these wicks, you can definitely get in here and using at the very most the initial balance mid as your stop point. Essentially the same thing for the S&P 500 with their rejections 1, 2, and if you're a little early, this will be your first guess, especially with how weak the NASDAQ was. But I can understand how this may be a little scary. These just make sense for my setup, especially if you're just like super late. I'm getting here around the euro close will be the same thing as well. All right, and I'll pretty much leave it at that. So I mean, just to wrap that up, how well of a job did the buyers do as they've been in control of the whole narrative? Definitely 1 out of 10. I would give the buyers on the NQ maybe like a 4, um, and maybe like a 5 for the S&P 500. And it's primarily due to the delta that we're seeing. Again, I'm not sure exactly how many people are looking at the delta, but I mean, I know a lot of people are looking at the footprints as a whole for the intraday, and I'm sure people saw a lot of sellers really put this effort in. So I'm not really sure what to make of this, but it seems like a lot of effort and not much reward for the seller. So this may potentially set up for another squeeze. But again, you want to ask yourself who's selling at this point near these all-time highs, because a lot of this is going to be profit taking for sure. But just looking at the sector tracker, and we saw the majority of this downside was from technology, who's the reason we even got to this point as a whole. This just makes sense. Everyone else did a good job. This wasn't the best day, but we are mainly technology weighted. So this is really unsurprising, especially since the ES had this inside bar. But a little worrisome for the NQ, given this is now an outside bar, and that pretty much snapped their one-time framing to the upside. I don't have any thoughts for the weekend. Whatever happens, happens. We'll leave out all the fundamentals. And I may have a little more notes or maybe something for the end of the month, because Monday is definitely going to be important. Sorry, I'll leave it at that. Have a good weekend.